My theme song. Hello, everybody. Happy Sunday. I hope you're having a great day. We're going to be talking about mortgage rates and what's going to happen. There's been a couple of articles that have come out about mortgage rates because they are starting to drop. And there is rumors of, because the Fed cuts the rate, then the mortgage rates will even drop even more. But I'm not like the best person to be talking about this. The best person to be talking about this is a mortgage lender. So if you don't remember, I've had him on the show several times. One of our favorite mortgage lenders on YouTube, Mr. Kyle Seagraves.
Thank you for having the AI back. Wait. Your song? Is that a custom song for this show?
Yes.
What is going on? I feel like every time there's a new audio thing that I'm amazed by.
Yes. So I will be honest with my audience. You can go ahead and put that on live, like you can have it live on the air. I don't know if this has got shot out to my audience. I'm wondering if this went live because I'm not seeing anybody in the comment section, which is weird. Let me look. Eddie, do you see anybody in the audience?
I can check over here too.
Yeah, well, let's go over here because if anybody's in the audience, I'd love to see you. Oh my gosh, I'm having a little heart attack right now. I'm not seeing anybody, but it says that there's 90 people watching, so I don't know. Does anybody see it? I don't see it on my channel. Do you?
I see it on your channel. Yeah, there's plenty of people commenting here.
Oh, okay. Maybe the comments were turned off by accident.
They're saying we're here.
Oh, it's private, he says on YouTube. Okay, hold on. So Eddie, I want if it's private, go ahead and try to make it public. Oh my gosh. Kyle, could you talk about the interest rates real quick? And I'm going to go help Eddie on the other side.
I sure can. Welcome to the Kyle Show. I've taken over and we're going to talk about what's going on with mortgage rates. So might as well jump into, I think some misconceptions people have about what's going on with mortgage rates. So if you're looking to buy a home, you've likely heard about the upcoming Fed Reserve meeting and the potential for a rate cut here in September. And what a lot of people think about mortgage rates or with the Fed funds rate is they think that the Federal Reserve controls mortgage rates. So a lot of people have been kind of waiting on the sidelines to buy because they're saying, I'm going to wait to buy until the fall because mortgage rates are going to drop. And then I'll be able to buy a home that's more affordable. And unfortunately, that's not exactly how that works. So the federal funds rate actually controls what's called the it's the overnight rate for banks lending money to each other. So it doesn't directly control mortgage interest rates. And the federal funds rate is mainly used to combat inflation. So the reason we saw rates increase so much over the past year or two is because inflation was higher. And so inflation is basically the biggest enemy to mortgage rates. So as inflation gets higher, mortgage rates get higher. And then what the Federal Reserve does to try to combat that inflation is they raise the federal funds rate. It's kind of like the brake pedal on the economy to slow things down. So the Federal Reserve actually makes it more difficult for the economy to grow to slow down inflation. And so what ends up happening, though, is people see mortgage rates increase, they see inflation increase, and then they see the federal funds rate increase as well. And so the assumption is that, oh, you're back, and she disappeared.
I'm back. I'm so sorry.
Okay. There it is. All right, so we all good now?
Yeah, you gave everybody a good education on the federal funds rate. So keep going.
Perfect. Yeah, I'll wrap it up quickly here because I wasn't sure how long I was going to stall for. So basically, a lot of people think that because they saw mortgage rates go up and then the Fed funds rate go up, that it means that they are connected, and that if the Fed rate goes down, then mortgage rates will go down, and not really. And maybe we can get back to this later. I don't want to steal the front of the show here with a bunch of inflation talk, but I have a chart that we can maybe eventually talk about, seeing what happens with mortgage rates when the Fed funds rate decreases and when it increases. And hopefully that will help people maybe see that they're not quite as connected, and that in September, we're not going to see rates drop by 0.25%. This is not how the Fed funds rate impacts mortgage rates.
Well, it's possible, right? It could happen, right? Is it
Everything is possible, but
right?
basically with all mortgage rates, they're traded on a secondary market with mortgage bonds. And mortgage bonds, like all markets, like the stock market, they're always trying to predict the future. So if
Right.
right now everyone's pretty much there's like almost 100% guarantee the Federal Reserve is going to cut Fed funds rate in the future, well, that's already what's called baked into the market because we're
Okay.
already expecting the rate cut. When we get to the September meeting, it's not like they're going to say we're cutting rates and then there's a drop in rates because we know
Oh.
they're going to drop or we know the federal funds rate is going to decrease. It's already priced into it in the same way that if Apple tomorrow said we're um, in 2 months we're going to release our financial statements and it's terrible.
Mm-hmm.
Well, Apple's stock today would tank, not when they release the financial statements, because
Right.
everyone's predicting the future of what's going to happen.
So would you say that with mortgage rates, it's not as reactionary as it is with the traditional stock market?
It's definitely more reactionary than I think it has been in the past, but it's
Okay.
more reactionary towards inflation and like the jobs market
Yes.
rather than the federal funds rate. The federal funds rate is a good indication of how the Federal Reserve feels about the economy, which
Mm-hmm.
is in strong correlation to the jobs market and inflation.
Mm-hmm.
But the federal funds rate is almost like the volatility we see in mortgage rates right now is mainly because of inflation and jobs data. And like that's what's happening with the economy rather than the Fed funds rate. That's more of like a secondary tool or a secondary data point that's not really
Mm-hmm.
fueling mortgage rates.
So thank you everybody for your patience. I want to thank the audience that has been so kind to me to get this all straightened out. Eddie was able to get it all coming up on his end. It was very strange because there was like no comments coming in, and I'm like, how does it say that there's 90 people and there's no comments coming in? But we got it all.
It went private somehow.
Yeah. So on the
That's
stream,
fun.
yeah, but I appreciate it.
Huh.
But this whole conversation with Kyle here came from the fact that this article had come out, and he said something's a little miss about this. We're going to talk about the misinformation on it. And that was the CBS article, or was it the ABC article?
That was the CBS article.
Eddie, if you could pull up the CBS article, I'd greatly appreciate it. Thank you so much. Yeah, because I like for people to understand what is the misinformation. It says, here's when mortgage rates could fall below 6%. And matter of fact, it said it could reach 5% at one point, and they changed the headline.
I know they were doing lots of math on this article.
Yeah, they changed this headline because it was the original headline said mortgage rates could reach under 5%, and I was like, what? And that's why I picked it. And now they're saying 6%. they did a little editing on that. Is that it may be hard to believe now, but it wasn't long ago the mortgage interest rates were nearly historic lows of 2020, where the average 30-year fixed rate mortgage was at 2.91%. A year later, it had dropped even further to 2.86%. However, the pandemic influenced economic factors waned. Inflation rose dramatically in 2022 to its 40-year high. Interest rates soon followed. In August of 2023, the average mortgage interest rate had nearly doubled to 7.3. And at one point, it almost hit the eights. It was in the eights for a minute.
Mm-hmm. Yeah.
Inflation cooled significantly in 2024, dropping to its four consecutive months. And while the Federal Reserve has kept the federal funds rate frozen at ranges between 5.25 and 5.5, cuts appeared imminent in September. When those are finally issued, rates on mortgages will continue to drop. While today's average 6.5 rate is a 30-year mortgage seems high, it may not be elevated for much longer. Mortgage interest rates could fall below 6% sooner than the borrowers anticipated. Below, we'll have the details when this change could take place. But like you were just saying, it's probably not as likely as they're
in school. Did you ever have that fear of being called on and you had to read out loud? Was that just me? Okay.
Yeah.
I'll say, well, you don't have that now, but I always hated that. Reading stuff out loud is the worst.
Well, I'll say this, that reading out loud in front of 216 people isn't nearly as horrible as putting out a video where thousands and
Yeah,
thousands of people can just berate you on a regular basis. But
that's fair.
what that article was saying, though, is that because the Fed's going to drop the rate, then the interest rates are going to drop, but which is actually the opposite of what you're saying, right?
Yeah. So the main issue I have with this article is at the last two sentences of that top paragraph,
Mm-hmm.
where they say, so if a 25 basis point cut, which is basically 0.25,
Mm-hmm.
and I can help you with this, Eddie. If you scroll down to the headline that says, here's when mortgage interest rates could fall below 6%, it's a little
Mm-hmm.
bit like halfway down the article.
Like this.
Okay, right there, that first paragraph, the last
Uh-huh.
two sentences,
Uh-huh.
says, so if a 25 basis point cut, which is 0.25%,
Mm-hmm.
is issued, then mortgage rates could, in theory, drop to 6.32 from today's 6.57. Right?
Mm-hmm.
They're just taking the current rate minus 0.25.
Mm-hmm.
But that's assuming today's rate hasn't always already been priced in September cut. If lenders have, then that rate won't move downward much further in September. So what they're doing here is, whoever this author is they're saying at the end, what's true is that the impact of the Fed fund rate cut is already priced in. Like we were talking about, that's how markets operate, is anticipation of what will happen in the future. So if we already have information about what's most likely going to happen in the future, it's already changed in the market. And then they said, if lenders have, then the rate won't move downward much further in September. But they put this first sentence in the beginning. I could just assume to try to get more traction on this article. Like, I don't know why they would put two completely opposite thoughts here in the ending of this paragraph. But basically, I think this is how a lot of people think, is they're thinking that, okay, they're hearing about a 0.25 percent cut in the Fed funds rate, and they think that mortgage rates will come down that much. And that's just really not how it works, because they're completely different numbers. The Fed funds rate changes. It's basically interest that banks lend to each other on an overnight basis, where
Uh-huh.
mortgage rates don't have any impact in that at all. And I can pull up this chart, Eddie, if you wouldn't mind.
Yeah, there's a little tab that says Kyle at the bottom. If you could pull up his chart, that'd be great.
So what this is doing, I know it's a little hard to see.
Uh-huh.
So the red line here is
Mhm.
the 30-year average mortgage rate. And the blue line here, which is almost impossible for me to hover over in this article,
Mm.
it's really faint, is the federal funds rate. So this is what everyone's talking about changing in September, decreasing
Mhm.
by 0.25. Well, if we look over since 2002, we can see, okay, there was this massive decrease in the federal funds rate, all the way from 5 down to 1.8. What
Mhm.
happened with mortgage rates? They didn't change that much. They went down, absolutely, but they
Uh-huh.
didn't drop as much as the Fed funds rate. Same
Right.
thing over here. We see Fed funds rate goes from 5% all the way down to almost zero. Mortgage rates change from 6.2 to 5. Okay, so they change 1.2% versus a 5% difference in the Fed funds rate. And then we see pretty static, even while the Fed funds rate was
Was really low.
basically nothing.
Mhm.
The mortgage rates are actually slightly decreasing over time. And then even here, you see the Fed funds rate actually starts increasing rates. What happens to mortgage rates? They don't increase that much. And even when you're taking a look at these numbers, you see these like dramatic drop offs, and then slowly they follow. So there's a slight trend that happens. But again, it's because of economic data, not because of the Fed funds rate. So this increase here, if we take a look, mortgage rates actually started increasing for a brief period before the Federal Reserve actually increased the Fed funds rate. And the
Right.
reason why is because inflation data came out that suggested that there's a ton of inflation in the economy.
Mhm.
Again, inflation's an enemy to mortgage rates. And so mortgage rates increased. Then the Federal Reserve came in and said, we need to slow down inflation. Then they changed the Fed funds rate. So what we're seeing here is more of a like correlation, not causation. So when we see like already we're seeing this decrease in here, again, this is because we're seeing inflation going down, even though the Federal Reserve hasn't changed the Fed funds rate since what is this? August. I wish I could. You see how hard it is to click this blue line?
Mhm.
October 2023 at that same number. So I hope that shows people that it's not exactly a one for one thing, but so
Mhm.
many people are waiting on the sidelines. I think because they think it's September, rates are going to drop, and it's going to be easier to buy. And I think a lot of people are going to end up in September realizing that's not going to be the case. They might decrease a small amount, but likely not that 0.25%. And then they're probably going to want to get back into the market at that point.
Well, I think for a lot of people that are like really interested in buying a house, I don't think it's their fault because every article with financial experts have said
Yeah.
September the interest rates are going to come down, and it isn't
Yeah.
the first time that they've said, oh, well, they're going to go under 5 in September. I've heard this all the way back in May. That they said, oh,
Yeah.
because of an election season, they always bring down mortgage interest rates, blah blah blah. I mean, I don't know how many experts I mean, honestly, there's been hundreds of articles, so I can see why
Yeah.
people are looking at that. And then there's optimism on the horizon, especially if you're trying to find your first home, because there is more supply of houses on the market in a lot of areas. So they're thinking, okay, well, interest rates are going to come down, and I'm more likely to find a more affordable house.
Yeah.
But it's very market specific, very market specific. And if you're on the fence, like really, really start paying attention to what's for sale, and jump on it when you can.
Yeah. Yeah, and absolutely. I don't want people to take away from this that I'm saying that mortgage rates aren't going to decline in the future,
Correct.
because we are seeing inflation come down, and which is really good for mortgage rates. It's just a lot of people think it's Fed funds rate, mortgage rates, and they all work. Someone has a little dial and they can just tick it down, and it works that way. Mortgage rates more than likely are going to come down. I'm expecting in a healthy market, we should probably be seeing around 5.5 to 6% as a good foundational level for mortgage rates. But that's going to take time to get down to as we see inflation stay low where it's at, and the Federal Reserve kind of backing off the brake pedal to confirm that they feel like inflation is under control. That's when we'll start to see mortgage rates actually start to come down to those more like base levels of 5.5, 6%. And if you want, I can go into why we probably won't see 3% again for a long time, but we can also jump into some other questions too, because I think a couple of people have some.
Well, yeah, we're going to do that in two shakes of a lamb's tail. But we got an email that had come in. Remember, I sent that to you. I just sent it to Eddie to go ahead and put on the screen because I don't want the person's name to be shown up. So I cropped it so she could put it up on the screen. It will show up in the middle here. Eddie, I just sent that to you. You can see it in messages, and then you'll be able to put it up on the screen. If you don't know how to do that, that's fine. I'll just read it out loud. If you can, I'll just go ahead and read it. It says, Miss Smallhorn, I was wondering if you knew anything about Sustain Act and natural capital accounts. If so, how will they impact people looking to buy their first home with USDA loans? I don't know anything about the Sustains Act or the natural capital accounts. What is this?
Yeah. So when you sent that to me, I also had no clue what that was. I've never heard of it. And it's because it's related to sustainability and not mortgages.
Okay.
So USDA is like a huge section of the government.
Okay.
One tiny thing that USDA does is they do USDA mortgages. They have two for primary residences. There's one called a USDA guaranteed loan, one that's USDA direct. USDA guaranteed is what most people get. It's for moderate income borrowers in rural areas. So most cities, a commute of like 20 minutes, you're in a USDA area, and it's 0% down and really great rates and really low mortgage insurance. So great program. But the Sustain Act and I forget the second one, the
Capital
accounts. Yeah, those have to do with like environmental sustainability in a completely different section of USDA. And so it doesn't have any impact on the USDA mortgages.
Yeah, natural capital accounts.
Yeah.
Okay, well that answered that question. That was completely new to me, and I was like, I'm not gonna lie and tell you, but I have a mortgage guy on here on Sunday. We're gonna answer it. So
yeah, it was new to me. I looked at it and I was like, oh, apparently I have no clue what's going on because I don't know what this is. And then I looked at it and I was like, okay, this is more about protecting drinking water sources and local ecosystems. which I'm not a super big expert on.
Well, you should be.
I know.
I'm giving you. Charlton Zimmerman, hello, nice to see you this week. It says, question, do you think that there has been a single family price fixing like the DOJ says has been in the case of rental units? 100% yes. So what he's talking about is there's a company called RealPage, and RealPage is a almost like a CMA for real estate agents, like cost market analysis for real estate agents. But this is for rental properties. In the agreement, they say, do you have use of our system? You're contractually obligated to set your rents at the price that we tell you that it should be. And we adjust it with our special algorithm so everybody's in line in the neighborhood. Well, what happens is that everybody in that area is using the same algorithm, that same RealPage system. And sure enough, every apartment complex is $1,500. And then all of a sudden, they all jack up their rates at the same exact time to $2,000. So now the price fixed the neighborhoods because they monopolized the fact of having to adjust, what it should be. So when real estate agents price a home, they use something called a cost market analysis, and it's done with a computer system, and it takes all the houses that have sold in that area that meet the same credentials. Like it has the same kind of roof, has the same kind of yard within reason. And we price it to what the market is doing today. What they were doing is they were noticing that people were willing to spend more. And they got all of these apartment complexes and single family homes and everything else. If you wanted to use our elite system to get the most money and income from your asset, work with us, but we're going to tell you how much you're going to have to put your rent at.
Do you know how many like markets they were in, or how much like market share they were influencing?
I know it was really bad in Chicago. They got, I think that's where they got busted originally, was in Chicago. There were some areas in Texas that they really were dominating. I mean, it's all over the country in certain, some certain markets. I mean, they're not in every single market, of course, but some of the biggest markets. They got, but
this is saying,
go ahead.
The lawsuit says the company is by far the biggest in the industry, controlling 80% of the market.
No monopolies there. I don't know what, like, no monopolies there. And so, so it comes down to price fixing and using algorithms to price fix and squeezing as much income out of people as possible. And that makes for less competition because everybody's in line with the same price. They're not letting the markets do what they're supposed to do. So, RealPage property management. They're in hot water. No, you know what? Speaking of that, so a lot of people are rental units now that are thinking about buying a house. Does your rental income count towards your credit score? Your rental, does that count?
Only in certain circumstances. For most people, no. There are situations where there's different like services where you can they'll apply your mortgage. I'm sorry, not your mortgage, your rental payments to your credit report. I think your landlord has to be able to like sign up with them though. And then I believe some credit scoring models, I think some of the Vantage models will include it, but mortgages use FICO that don't have that. And so for most people, you're not going to be able to get a benefit from your rental payments on your credit report, unfortunately, which is really silly because it's like the biggest payment that most people have.
Yeah, at one point, people were paying like new renters were paying 45% of their income just towards rent.
The problem is because it's not a debt, so it's not an extension of credit. Rental payments aren't credit that's being given, and unfortunately, we have this terrible credit system that only cares about, it doesn't care about repayment. It cares about how much debt you have and do you pay back the debt specifically. But
that should be fixed. That something needs to be done there because that doesn't even make any sense. You have a payment in order to get the apartment. You have to show your credit score, right? But it doesn't affect your credit score. But everything else to get the apartment affects your. If you didn't pay, it would affect your credit score. But if you
Most
do
likely.
pay, it doesn't
Yeah.
affect. That doesn't make any sense.
It's a very terrible system. And then for what's interesting too is for people who don't have a credit score. So let's say you've never had credit at all. When you look to get a mortgage, you can actually get a mortgage with no credit score. And what lenders will do is they mainly look at your rental payments and then things like utility bills or insurance bills,
Right.
things like that actually show you pay back things over time. And so it really is a frustrating system that I wish was better. There are instances where even if it's not reported on your credit report, for instance, like if you get a conventional mortgage, sometimes what you can do is include your rental payments and give that to the lender, and that can help nudge your approval. So if you don't get an approval with a conventional loan, you can actually show your lender that you've been making on-time payments or rental payments for the past 12 months, and that can sometimes help flip a loan that wasn't approved into an approval, but it still isn't something that's on the credit report.
Well, good to
If I
know.
could eliminate all of the credit system, I would do it. But
Did you know there
it's
was
like
a
this
time
huge
in
monopoly thing.
history that credit reports were not a thing? Does anybody know what year credit reporting started?
Wasn't it like the 80s? It was pretty recently.
I'll give it somebody the round of applause when they get the answer right. MHO8 says, what is a correlation between mortgage rates and the 10-year Treasury?
So the mortgage rates in 10-year Treasury are usually tracked pretty closely because basically mortgage rates follow like a 30-year bond because that's all mortgage rates are based off of is a bond price. And so it's the same thing with the Treasury. Treasury works like a bond, it's a bond too. So they have very similar returns, so to say. They move very similarly, like when the Treasury goes up, so do mortgage rates and vice versa. And usually there's a spread of about 1.75%. So mortgage rates tend to be about 1.75% above the Treasury yield. However, when markets start to get risky and volatile is when that spread increases quite a bit. And that's where we're at right now. Mortgage rates are quite a bit above that 1.75-ish% on average difference between the two. And so that's where a lot of people are basing the expectation of mortgage rates when things become less volatile to come back down to around 5.5 to 6%, because that's where we're seeing the Treasury. And so that's where people are getting that number from. It's not just like pulled out of the air. It's that in a quote unquote healthy, stable economy, when inflation isn't high and the Federal Reserve isn't like slamming on the brake pedal, that's where we expect mortgage rates to be as in alignment with the 10-year Treasury.
So some people did some Googling while you were talking and figured out what year credit scores came out. But I knew that the TransUnion was founded in 1968, right? But the actual like combination of all the credit scores were in 1989. That was Bubble. Look at this. Boom. First credit score was introduced in 1989. Everybody give Bubble Landia a round of applause. Very good.
Oh, they put it in quotes too. Next time, just own it. Act like you thought it. Yeah.
You Googled the fastest. So yeah, act like you knew that right off the top of your head. Right. We're not going to double check you here. I knew the other thing was it was 1968 or 1969. And yeah, but this is another one. What year were women allowed to buy a house without a spouse?
Oh, I heard that one recently, and it's like really jarring.
Yeah.
Wasn't it around a similar time frame? I think.
Well, let the people go Google again.
Yeah. Who can Google faster, me or them?
Yeah. Just Headphone says, question, I am in the process of building my new home, which is expected to be completed by March next year. I'm wondering if FHA loan interest rates will drop below 4% by then.
Very unlikely. Below 4%. I mean, I know I alluded to the 3% thing. Basically anything below 4%, no one really expects to see for a long time. And the main reason why is because mortgage rates before the pandemic were hovering around that range, 4.5%, 5.5% range. And then we have COVID happens, a ton of uncertainty. And what ended up happening is the Federal Reserve at that time, instead of applying the brake like they're doing now, they put on the accelerator pedal, basically. So they were purchasing billions of dollars, like hundreds, billions of dollars of mortgage-backed securities. And so what that does is it artificially lowers mortgage interest rates, like it makes them plummet. They're basically flooding the market, kind of creating a basically like an inflation in the mortgage bond market to then drive down mortgage rates. And that's why we saw rates, people were getting like 2.5%, 3.5%, 4%. Or I guess they were more around the 3.5% range. And what's happened is the Federal Reserve is actually doing the opposite right now. They're actually, instead of purchasing mortgage-backed securities, they're both selling them and letting them fall off their balance sheet. So they're actually doing the opposite of what they were doing before. And so we won't get back to that range, 3.5%, 4%, most likely until we have another huge thing that happens and the Federal Reserve freaks out.
We don't want any more unprecedented times. We've had it up to here.
I
know
could
my
use
audience.
3 more. I could use at least 3 more unprecedented events.
No,
and then I'll meet my quota and I'm done.
I have met my max. At least give us a breather, a good 10-year breather of unprecedented, like no more. Bubble in it again. Look, they even did the quotes again. Yep, 1974. It started in the 70s.
Oh, no, you got to own that.
Yeah, 1974. Yep, was considered the years of women's liberation. Up until then, it was technically illegal for financial institutions to refuse loans to unmarried women and require them to have a male co-signer. And like that was even true of like checking accounts and everything. So it wasn't until 1974, 51 years ago. 51 years
that's
ago.
rough.
Yep. Overjoyed said, what year could women get a mortgage? Yep, there she goes. Overjoyed as well. Yep. Right after.
Although I think Overjoyed, this is not copy and paste at all.
No.
I think that was from the brain. They have it.
Mm-hmm.
We're giving out awards. I think we know who it is.
But you know, the most interesting fact is that more single women own a home than single men.
I can totally see that. I feel like I don't have data on it, but
go look at your charts.
The mortgages that I've done for single people are primarily women over men.
Yep.
I wish I had some data on that, but I don't have. This part just anecdotal.
Yeah, I get a lot of comments that are saying, "Oh, that's because they got it in the divorce." And I'm like, no, if you just take single women, never been married, more of them own a home than men. Mm-hmm. So Matthew Black said, should I hold off from FHA loan for a conventional with a 20% down? I have good credit score. Just curious if he's a first-time home buyer. Congratulations on trying to get your first home, by the way.
What a great question. A lot of people really recommend conventional loans over FHA loans. Mm-hmm. However, in a lot of instances, for most people, FHA is actually a better option, even with the mortgage insurance, even with the upfront mortgage insurance, because FHA rates are lower than conventional. So it's hard. What I think it's hard is when you were comparing things that are hard numbers, like different types of loans and purchase prices, mm-hmm. It's better to just take a look at the numbers and get the answer there. I can give you an anecdotal thing off the top of my head, but it's easier to just run the math for it. Can they just email me and I can help them out with the math on that? Does that work?
Yeah, tell them your email. What is your email? Type it in the comments. Can you type it in the comments? Are you allowed to do that?
I have to connect my YouTube channel. Hold on.
No, you know what you can do is go ahead and put it in the private chat and Eddie will put it up on the screen.
That's perfect.
I know. We're good like that. This is some good software. Kristina knows how to do it. If you ever want to join my YouTube, how to be a good YouTuber course, go to realestatevideogeeks.com and I'll walk you all through this.
Well, I think the hard part is the second step of the course is getting someone amazing like Eddie, and then I'm stuck.
No, that isn't necessarily. That's not on there. Diver Girl 82 said, I just had an offer accepted on my house. Congratulations. Yay. When I started looking, it was around 7, and then it went down to 6 something. When I was getting ready to make an offer, I was told it was 5.9. Now it's 5.8.
Oh, great.
Yeah. That has to do a lot. I'm going to tell everybody something they don't know. everybody's interest rates in everybody's state is completely different. The other thing I'm going to tell you is that interest rates go like this all day long. What it was in the morning is going to probably be different in the afternoon. It's always like this, it's not significant, but they do move up and down all the time. So if you see it in the morning as 5.8, that doesn't mean that in the afternoon it could be 5.7, like you just don't know. Like you're timing it. And if your mortgage lender's on it, go ahead.
Can I share a cool interest rate website that a lot of people don't know about? If you search interest rate explorer and then put CFPB, the federal government actually has a little tool where you can, I don't know if Eddie, you can throw this on screen or not, or if that makes things too complicated. But what it lets you do is actually put in your situation. So you can put in your state, your house price, your credit score, and it will show you the rates on average that most people are getting. And so it's a really good way to kind of see, like, I think it's where a lot of people are at, is like, is this a good rate? Is this a bad rate? Am I getting like ripped off with this? And you're able to put in your situation. That way you're comparing somewhat of like apples to apples. That way you're not just saying, if you have a 600 credit score, but you're looking at rates online, of course they're going to be lower because they're showing you the best scenario with a 780 credit score. And this gives you a good idea of where your rate might be based on your situation.
Eddie did go ahead and put your email in the chat. I did as well. So it's in there. Yeah, that's in there. I did see a question come in about vacant land. Eddie, if you could pull that question back up, that would be awesome. It said Food and Crafts and More said, please discuss about vacant land for small personal farm in Florida. I'm not in Florida, so I don't know how farmland works there. It's all going to be different. But I mean, like, I don't know what you want to know about vacant land. I will tell you this. When you're looking at a piece of property, the best vacant land already has some kind of improvements done to it. Whether that had been like it was once lived on and it has an old house, so it has a well or has city water and sewer. Has that lot been cleared? Does it have a current survey done on it? Is it in a flood zone? Is there a flood elevation certificate? The best land that you're going to get has all those things already in place. But when you're looking at raw land or farmland, most likely it's not going to have that. And in some cases, farmland, you can't put a residence on. It depends on the area. They'll say this is only meant for livestock. You can't put any permanent buildings on this location unless it's for the livestock and the livestock only. So, you're going to have to investigate what the rules are in Florida for farmland. It's completely different. One of the biggest tax credits that people use in Texas is something called a barndominium. So they buy like farmland or agricultural land, and they build a barndominium because it's considered agriculture. Really, it's a house, but it's a barndominium. So now they get a tax break on their property.
Oh, is that why?
Yes.
I just assumed people wanted to have these like crazy, weird, cool homes that were like super massive inside. I didn't realize it was for like a legal loophole.
Well, it's definitely a trend that people are really interested in. The bonus happens to be that you get, if you put it in the right place, you can get a tax exemption from it because you're using it as a residence because of the farm.
I had no idea.
Right. So, and then like another thing too is what people consider a barndominium is very different in every single state. Like what we call barndominiums here in Louisiana look completely different than the barndominiums that they make in Texas. And then if you go to barndominiums in Pennsylvania, those look way different than the ones in Texas. So like everybody's version of a barndominium is a little bit different. So when you're working with somebody or you're talking to somebody, ask them show me what you mean by your barndominium or what your idea is. Because everybody's got a different viewpoint. Like here it's metal buildings that look like a metal building on the outside. And then when you go in, it's like, wow. I mean,
it's like a whole different world inside.
Oh, it literally looks like a garage, like a garage type metal building.
Yeah.
And then you walk inside and they're little mansions inside there.
I would hate to see like the air conditioning bill on one of those things.
Oh, are you kidding? They seal those suckers up so good, and they use the right insulation. Those things are amazing. Not only that, because the ceilings are so high, a lot of that heat is already rising to the top, and they're using that upper area for some kind of storage or whatever. And then the downstairs area, since it's so large, they're basically living all downstairs. And then of course, the floors are concrete, so they're cold. They stay nice and cool, and the concrete pad is thicker. And so you're like, it's just they got it down, but it's all because of the area of Louisiana. Their barndominiums look completely different. How they treat the foundation, everything. So, anyways, I don't even know why I went on that tangent.
Yeah, we don't have cool barndominiums in Ohio, at least not that I'm aware of.
I bet you do. You just don't realize it.
I know. I need to find some.
You know what? I've been thinking about moving to Ohio now. Now you got me curious about Ohio. Is it a great place to live?
I think Ohio is pretty nice. I mean, it's not the most scenic place to be, but
have you been to Louisiana? It's pretty flat.
We don't have there are some tornadoes, but other than that, there's not like a ton of there's no other like natural disasters. So
snow?
it's a plus.
Snow?
It's pretty affordable.
You got snow? Snow.
Oh, yeah, we have snow. Yeah. It's light though. It's not crazy.
Corn. Somebody said you have corn.
there's a good amount of corn and soybeans. Yeah.
Matthew Black has a question. It said, should I hold off from an FHA loan for a conventional with 20% down? If I have Eddie, we just did this one. Eddie's slacking. Eddie was not paying attention. If anybody has a question, make sure you put it in the chat. You have to write the word question first, just like our last commenter did. He put it up there in the corner there and put question, and then you can put it up on the screen. Many times when we're doing this, people don't realize that this is live, so you can watch. Sometimes when they're watching it back, they think it's live and they're like, you're not answering my question.
The amount of comments I've seen on like past lives on my channel that are like, you can see they'll like comment multiple times as if it's a live stream. And I feel so bad. I don't know, like this is not live.
It's okay. It's okay. A lot of people are just switching off the television and moving to YouTube, so they don't realize what they're watching isn't live. Or they'll see it in their about section or whatever, and it will say live even though it had already ended. So they'll get it. It's just getting used to a new thing. You know, a lot of people are now watching it on television, which is really interesting. Jess RR says, Kristina, my fear with natural capital accounts and the Sustain Acts is that the government could tell you how to live on your property for sustainability. No chance of that? ? Oh, when you mingle government into anything, there's always a chance for something. And then they'll be like, but we got to do it. We got to do it. And they'll always come up with a reason. This was something completely new to me. I had no idea about that. And when it related to loans, any kind of loan question, I always give it to the experts. Kyle gives me a little bit of kudos every single time. He's like, you're the only real estate agent that stays in their lane and doesn't talk about it.
That's true.
And I'm like, I don't want to step on anybody's toes. There's so many ins and outs and nuance to home loans. I don't mind giving like very blanket information, but other than that, I let the experts who do this day in and day out talk about loans. That was a completely new one to me. But
yeah, I'm even looking like at this again and looking at, tying in buying a house. I'm not seeing anything in this that's related to primary residence mortgages or anything that's dictating that. Everything in this is talking about it being authority for conservation programs, including those that address climate change, carbon sequestration, wildlife habitat improvement, and protection of drinking water sources. There's really nothing in there that I see that's about you owning a home.
I want you to say that one word 5 times fast.
Sequestration? Is that how you say that?
I don't know. Show us the word.
It lets me listen. Sequestration.
Sequestration.
You probably can't hear it.
Nope.
Sequestration. All right. Cool. Yeah, I don't.
That was our word for the day.
If there was anything to fear with that, like Sustain Act, we would hear about it from other people. There's something I could be missing, and if so, like, feel free to reach out to me and let me know. But I don't see any. It just doesn't look like it's related to buying a house.
Interesting. Well, thank you. That was great because I love learning new stuff that I've never heard of before. So
yeah.
King Haas Kennel says, if the government really wants to stimulate the housing market, why don't they come up with a program that allows homeowners with low mortgage rates to keep their rate when they're buying a new home? Okay, this is what
What is this, Canada?
No, I'm going to tell you what I think this is what needs to be done. And Kyle, you can throw your 2 cents, but in my utopia brain cells, this is what I would want. So if you look at any chart and on any statistical website, they'll show you the exact amount of homes that were built prior to 2008 and how many homes since 2008 have been built. And we've had a shortage since 2008 to the point where it was like whoop, going like this, and then it went like this, and then they slowly started coming back. But we've never reached the levels that we needed to be to have a more sustainable home prices where they would only go up, let's just say 2 to 3% a year, which is typical, normal. With the lack of inventory that we've had in the United States, and what happened with the pandemic and interest rates, that's what caused home prices to go as crazy as it's gone. We have even more of a limited supply now as we've allowed more institutional investors, and you can argue this or not, but if you allow more entities, bigger entities with bigger pockets to buy up the more affordable houses in the area, then you have even a smaller supply. Then you have the shortage of supply of builders building as many homes as they used to build. Then you're going to have a problem that I've been talking about since 2018, when I started saying this is going to be a problem. I didn't think it was going to happen as quickly as it did because of the pandemic and what happened with interest rates. It happened a lot faster than I anticipated. It was obvious when you have that lack of supply. If we, first of all, give an incentive to home sellers to sell their home, let's just say under 1,500 square feet to a single family buyer, not to a organization, right? They get a tax credit of, let's just say $5,000, right? That would incentivize people to sell their home. So, and it would encourage some people that are holding on to second houses because they're like baby boomers and they're like, well, you know what? I need that extra $5,000. And you know what? It gives them the incentive to want to sell. So that's one way. We also need to cut the red tape when it comes to development of land for neighborhoods. That process in many states is ridiculous. So if we eliminated a lot of the red tape that is required to start the development process, so it doesn't take 10 years before that land is now turned into a neighborhood because of all the regulations, that would help get a lot more houses onto the market. So that is what I suggest to stimulate the economy without causing a knee-jerk reaction where we have too many units on the market and now the value of homes even drop drastically. And that is just saying as if the job market continues to go up, we don't see a huge recession where people are losing their jobs and then they end up losing their homes. All right.
Yeah.
Boom. What is your suggestion?
Yeah, no, I think you nailed it. And what's interesting too about the comment about people being able to keep their interest rate is on the surface, I absolutely agree with you. I think that would be fantastic. But if we look at who's already done that, Canada's mortgage market actually functions very similarly to that, where you can actually transfer your mortgage to a different property. Mm-hmm. So in theory, their home prices should be lower, and they have a worse housing crisis than we do. Canada's home prices compared to income is insane, even compared to what's going on in the US. And that's with, so I guess to say, if that was the solution that would fix it, we would have seen that happen in Canada's market. And unfortunately, that's not the case. And I think what you're saying, Kristina, is exactly right, where it's really is kind of comes down to like fundamental economics, where it's supply and demand. We just have an extreme shortage of supply. Same thing with what's happening in Canada as well with their housing crisis and affordability crisis is, I guess I shouldn't call it a housing crisis because that kind of gives like 2008 vibes. Mm-hmm. More of the affordability issue is they're just limited on the supply compared to the demand, which shoots prices like so far up, which is what we've been seeing. So yeah, what you're saying about removing red tape, changing zoning laws would be really helpful. And then I know a lot of bills have been put forward to suggest incentivizing home buyers or making it easier for like, assistance for down payments for home buyers. I think it'd be better for builders to get more incentives to be able to build. And then
Right.
maybe some more regulation with the incentives around, okay, just because you're getting this incentive doesn't mean you get to charge that on to home buyers, because that's usually what ends up happening. But I think that would help stimulate things, remove the regulation restrictions, and then stimulate home building. That is going to be a long-term solution. Like, that's not going to be an overnight fix. Even if that started, still probably wouldn't see results for it for like 5, maybe 10 years, unfortunately. So
Down payment assistance or down payment tax credit or anything like that, when there already is a shortage of homes available, is all it's going to do is raise prices again. Like, that is not a good solution. I think incentivizing sellers to sell when they have smaller homes and and they can't sell it to anybody else but another individual, not a corporation. Then you get the whatever it is, whether it's a tax incentive, whether that's a check, whatever that is, that's I think works a lot better than giving more enticement, because there's plenty of people that want to buy. You don't have to entice them. The reason why we had a first-time home buyer program where they were giving like almost, I think it was like one time like $8,500 or something like that. The reason they were doing that is we had tons of vacant houses because there was so much oversupply of houses that were on the market. So they were trying to fill them up as much as possible. So to incentivize people and encourage them to buy, give them the money to buy them, they give them the down payment assistance to buy them. That's why that happened. We are not in that position right now. So I think that when you see platforms that are saying we're going to give first-time home buyers more money to buy a house, that's not really helping the problem at all. It's not. It's actually raising the price of the house.
The hard part is it's the solutions that need to happen are going to have they're not going to pay off for a long time. And so I think that's why a lot of people are suggesting shorter term things that seem good. And I think some of it too can be pretty political, where it becomes, if we get elected or if this party does whatever, then we'll be able to get this much money and that will help me in this one instance be able to buy a home, where that doesn't solve the long-term problem, and the long-term fix just takes a long time. Like, it's like with increasing housing supply, that's going to take a long time for that to change housing prices.
It wouldn't have to take as long as if they would incentivize modular home builders and give them the tax incentive, because they can pop those houses out like popcorn. They can have a house built in 6 days. So if you had land development red tape cut down considerably, then you incentivize modular home companies, not manufactured homes, modular home companies, to build real houses on slabs that have basements, whatever. Those houses could be especially a neighborhood. Once everything's in, they could just pop them out one right after the other. You incentivize that, you can eliminate a huge amount of the timeline to get those done. Not only that, your labor costs are way down too. It can be done. They just don't want it done. And I don't know the reason why. And it doesn't matter what administration. The solution has always been the same. But it goes like, blah, 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 blah. Well, what we really need to do is start this program where we can discuss the solution instead of doing the solution. They always have these incentives for discussion. We're open, we're listening. We want to hear your solutions, but they're never really entitled or incentivized to fix it. It's just another thing they can throw on their campaign. It's all the way down to the local level. It goes all the way up.
I think with most markets and pretty much most market regulation is you don't see change in policy until there's some sort of meltdown happens, or there's some sort of issue where it all starts to crumble. That's when regulation starts to come in. And so I think part of it is just the way that policy gets pushed through is inherently difficult. And that can be like, that's been good, I think, in some circumstances, and difficult in other circumstances like this, where it's like, we need more holistic measures to correct what's happening with housing affordability. But it's hard to get everyone behind one idea on what's the best solution, especially because the payoff is long. The political payoff for people is probably not very beneficial at the moment. It's not an exciting platform to run on. I'm going to change housing regulations so that in 10 years you'll be able to buy a home. It's just not as it's not a
People
cool
want an
platform to
immediate
run on.
answer, like a
Yeah.
immediate response. They want to like say, I'm going to get this. So and I better see houses in the next 4 years,
Yeah,
like in their
versus if
brain.
I'm like,
They're
yeah,
like, what's taking
yeah,
so long? Well, there's a lot. There's a lot. So Matthew Black has a question. Do either of you know what about interest rates or loans that helpful options on buying a double wide modular home on a permanent foundation? My fiance and I are first time home buyers. Okay. Can I, before you talk about the loan part, this is something I want to make very clear.
sure.
There's no such thing as a double wide modular. What you're probably looking at something is called a cross mod, but the word cross mod means cross modern, not cross modular. And what the salespeople at the lot probably told you is any of these houses that you see, we can turn into modular homes, but they're not built to modular specifications. They're still only built to HUD standards. Now that I got that out of the way, you go ahead with the loan part.
Sure. Yeah, as long as it's the only issue with loans really when it comes to modular, and Christina, can you correct me if I'm right, is modular is probably the better word for like the overarching. I'm sorry, manufactured is overarching.
Correct.
Then you have mobile and modular beneath that. So yeah, I guess when people say double wide and modular, I'm kind of like, well, which one is it?
Well, double wide, if you think of anything that's like double wide, single wide, triple wide, and sometimes now they're stacked, it's just a one shaped cylinder. When you're thinking of modular, they're individual rooms that can be configured any way you want into a house. It's built to the same regulations and specifications, if not higher than a traditional built home. They're not a HUD certified house. If it comes with a data sheet and a plate, it is a manufactured mobile home. If it's not like that and it's built to international building code, that is a house that happens to be built in a factory that they brought into the location.
Gotcha. Yeah. So with like conventional loans, FHA, you can get a loan for those homes, no issue. The only issue is when it's a mobile home. So really, mortgages don't like it to, one, be mobile. It needs to be permanent. And they also don't want it to be moved to multiple locations and then be permanent. It often is something where it needs to be from factory to a permanent fixed site, and it doesn't move and it can't physically move after that. So as long as it's not a mobile home, then you shouldn't run into issues with the mortgage. It's just there are some extra restrictions that come with like conventional and FHA compared to standard homes. Things like there can be a higher down payment percentage, usually is increased to 5% instead of 3% on a conventional loan. So, but other than that, you shouldn't have much issue running into that.
With manufactured homes as well, that one of the things that they proposed with the Biden plan, I don't know if you saw the affordability housing, they have an initiative that is out where they're taking manufactured homes, HUD certified manufactured homes, and taking off the chassis. And so they're saying that gives it that cross mod. So it feels more like a traditional built home. And in it, they will allow for better financing in the future. It's just a proposal that they have out there that they say that the public doesn't like manufactured housing, and because of the appearance of them with the skirting on the bottom. So the proposal is take the chassis off once it's delivered to that location, and then it's mounted to a traditional what is that thing? Thank you, foundation. Brain fart. Man, I need more sleep. Yeah, so that was one proposal because they can be put together very quickly. I think that, to me, there needs to be clarity if they're planning on doing this on what the consumer is actually buying. And I already know what happens in sales offices of manufactured housing and what they tell the public and sell the public, and what ends up being on a piece of paper and in their loan documents are two different things. So I'm very concerned about that. I mean, I'm not saying that it's a bad idea what I'm saying is that you have to make it crystal clear of the product, of what people are purchasing, so they understand. Because I don't know how many times I've heard people say, well, I have a cross mod. I'm like, and they think it's a modular home. But when you see their loan documents, it says
Oh, yeah.
HUD certified manufactured. So I'm like, it's not, you have a plate on here, you have a data sheet. So
yeah.
All right. So D-Jack says, question.
Oh no.
Anyone at any more at home like him? Kyle's a handsome. Do you know him? Do you know
This must be this must be my mom.
Oh, D-Jack is your mom, huh? Diana.
Either my mom or my grandma in here.
Dee Dee. You are handsome though. You're a good looking dude.
Thank you.
Yeah. If I wasn't married and old, then I would hit on you. The Bell family.
Those are some interesting qualifiers.
Well, those should be really high on the list. You don't hit on people when you're married. That I think that's like in the vows, you know. That's in the contract. The Bell family has a question that says, have you heard of someone being able to use a lot of land they owned as collateral with the bank to get a new construction loan to build a house on it? Now, I've heard them rolling in. I've heard them rolling in the land that's already paid for the construction loan. I don't know if it's necessarily collateral. They roll it in as one, so they have one specific loan, because that way it becomes real property.
Yeah. So I hear this come up a lot where people are saying, like, can I use this asset for collateral? It's kind of confusing because I know we talk about mortgages, but technically a mortgage just means you're assigning the property you're buying as collateral for the note. So even though we talk about getting a mortgage, in reality, most people the loan is called a note. You're not actually getting a mortgage. The mortgage is just assigning that physical property to collateral for the note. And no note that I'm aware of for like a primary residence is going to allow you to use some other collateral. The collateral for the note, for the loan that you get, is the property you're buying. So I don't know of any situation that you could use something like land for that.
Right. You couldn't use a separate piece of land on another location to fund the house on another lot.
Yeah.
They couldn't do that.
D-Jack is insistent that they're not related to me.
Oh, I don't know. Someone's hitting on you, though. You should feel flattered. I don't get hit on. I just get told I'm ugly and old. And then I don't know what I'm talking about, which always makes me laugh. I think they think they're getting to me, but me and Eddie have a field day sometimes laughing about how many, like, the mean comments. We get a kick out of it. Food Crafts.
Sometimes they're crazy.
I know. Which financial institution is likely the best for the consumers when it comes to small farm mortgages loans in Florida?
Anytime it's been a farm mortgage, and I'm assuming that when you're talking about farm mortgage, you mean it's actually going to have a working farm on it. Because sometimes people say farm and they just mean it's like it has a lot of land. So for
a homestead is not a farm. People need to get that correct too. A homestead is not a farm.
Correct. Farm, like income producing property. So if you're selling stuff, that's going to be a working farm. Rural First is, I know, what a lot of people will use. I don't have any experience with them. I've done about 5 loans with them on the wholesale side. I have never worked with them on the resale side, and they've been fine on the wholesale side. So
what was the name of that?
Rural First.
Rural First.
Rural, which is a fun word.
A lot of people right here go rural. I'm like, what? Rural.
They used to be called Farm Credit Service, I believe. And if you search that too, it should come up. But yeah, I would look into them. Their kind of bread and butter is income producing farms with a house on it. So that might be a good option. And Debbie said, Kristina, you're not old or ugly. Haters are going to hate.
Oh, I don't care. I'm like, I'm the youngest of 4 with 2 older brothers and a really mean sister. So, you know, I can take it. The funniest thing, I always remember this. I'd ask my brother, I'm like, do you think I'm pretty? He'd go, pretty ugly. I'm like,
Oh, man. It's brutal.
Yeah, when I was little, it hurt, but I'm too old to care anymore. Albert Universe says, do you have any mortgage loan suggestions for someone who is retired, eligible, but not yet filed for Social Security? I have savings. The amount of a loan would be 100,000 under. Thank you.
I'm sorry. I was distracted by someone saying, I think Kristina's pretty and I don't even have a foot thing.
On my website, there's a picture of me with my foot in the air. They said, do you have any mortgage loan suggestions? Do you have any mortgage loan suggestions for someone that is retired, eligible, but not yet filed for Social Security? They have a savings. The amount is around $100,000. Do you have any suggestions for them?
Yeah. So in some circumstances, you can actually use, you can qualify based on your future Social Security income. Because I imagine it said they were working, correct? Or I'm assuming maybe they're working.
Mm-hmm.
So for the hard part is for loans less than 100,000 is those can be difficult for a lot of banks. For instance, we don't do loans below 100,000. And the reason why is because one, the cost of producing a loan can be fixed. So it becomes often a lot of times lenders lose money on loans less than $100,000 because they have to pay all these people to work on this loan and it doesn't produce enough income to pay all those people. And then two, there's different regulations that make it difficult for that loan to even, I'm trying to figure out how to say this in a way that doesn't make me required to explain a ton of boring stuff. There's just different like regulations for how much can be charged on a loan.
Mm-hmm.
And so since a lot of loan costs are fixed compared to the loan size, it can start running into a lot of those issues. And then the lender has to lose even more money to provide a credit for that. So all that to say, I would look at a local credit union. They tend to be the best option for those types of loans. And they'll likely work with you on that Social Security income if you're going to be planning on retiring soon. Usually they want to see that within the next 12 months or have a plan for the next 12 months.
And that is true of manufactured housing as well. Go to your local credit union. They're going to give you a lot better rates. If you're looking at especially when you look at like a brand new manufactured home and you go to those places, they're like a dealership and they'll push you into their loan, office, and they'll say, oh, we've been doing lots of these. We can get it done faster. If you go with us, it's faster. You could try other places, but I'm telling you, we're super fast. We get it done really quick. Instead of waiting, 6 months, we can have it done in 3 or 2 months. They tell you, they promise you the sun, moon, and stars, but their terms are not necessarily the best for you, your credit score. Please, 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 if there's no other advice you take from me, please check with other lenders, not just one. Check with at least 3 minimum to get the best rates for yourself, because not everybody is doing this with the best intentions in mind. So just like really honestly, especially if you're looking at manufactured housing in a brand new area, check with your local credit union first as far as rates. Anyways, DJ says, I'm not related to Kyle.
I know they're very insistent on that.
Yeah, that means that they probably are, because they've been said that a couple times. Falsificationism. It says
rural.
Says truth. Rural is one syllable word. Rural.
Did we say it with 2 syllables? Rural.
Rural.
Wait, I gotta do the thing. Rural. Yeah, that's one, right? That's how you do the syllable thing, right? You do the little. I don't know. Phonics was a long time ago.
I know.
That's in the past.
There, MH08 says I could put a condo in my cup. If you guys like this cup, you can get them on Amazon. I actually have an affiliate link in my description, so you can get the Kristina cups. They're wonderful.
Yeah, that's a mug that's got its own HOA to it.
Even my friend Lawnmower, who's in the chat, who's been with my channel since the dawn of time, he says it's not the cup that's big, it's just Kristina's very tiny.
Oh yes, very petite, very demure, as the kids are saying now.
Yeah, very cutesy, very demure.
I can't keep up.
I love that trend though. That's so great. If you guys need to get a hold of me, you guys can go to my website, where it does have my feet picture on there, by the way. You can see my feet too. KristinaSmallhorn.com. And you can
God.
and then all you have to do is click on the pink link right there. Put your contact information on there, and I will give you a call, and we'll talk about your real estate needs. You can also, if you're a brand and you're looking for a collaboration, you can also click on that button, and you can request a collaboration with me. If you happen to be a real estate agent, while I'm plugging myself, if you happen to be a real estate agent and want to build a channel just like mine, you can go to realestatevideogeeks.com and I can teach you exactly how I built up my YouTube channel. Now, if you want the loan advice, I'm not the chick. I'm not the girl, but do you know who is? Kyle Seagraves. So
I'm the girl.
You're the guy. Yeah, you can be the girl too. Whatever makes you happy. Win the house you love. Go over there and go see Kyle. And he has the best information on YouTube. He never, what I appreciate about you is that you're not the scare the living bejesus out of people headline channel.
Thanks.
Really
I've tried to be very intentional about, I hate the clickbait stuff. I hate when everything is so intense. It's just not my personality, but yeah, I appreciate it.
Yeah, you're fantastic. And I love you that you came out here, and I appreciate you. And I love everybody in my audience. Over 400 of you were able to come over here today and spend some time with us. Sorry about the technical difficulties at the beginning, but man, Kyle handled that like a champ. If you happen to want to share this with somebody, this live stream with somebody, and you want to like listen to it in the car, I happen to be have this as a live stream, but it's a podcast. So you can go anywhere you listen to podcasts. Type in my name, Kristina Smallhorn. Kristina Smallhorn, I do know my name. Real estate for everyone. Real name? Yeah, that's my name. My real name. Kristina Smallhorn, Real Estate for Everyone. Unlike what most people believe, that is not Native American. It happens to be Irish. And you can share this live stream. Eddie will post it first thing in the morning on Monday. He always posts it on Monday. And you can share the stream out with other people. Kyle, thank you so much. Thank you so much.
Thank you so much. This was fun. And thank you, Eddie. Always in the background, keeping things together.
I know. I love him for it. And our moderators are always keeping the chat clean. And I love that too. I appreciate every single one of them. Some of them have been with me since the very beginning, when I used to only have like 30 people on the stream. Every week they showed up.
You got people writing songs, intro songs for you, and the little notification thing.
Super chats and everything. Yep. I love my community. We got the best. Kyle, thank you so much. Thank you, everybody. We'll see you next week.
Thank you all.
Eddie's gone, man.
Ooh. I want that custom song with the lyrics to it.
Oh, my theme song?